My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Has the gloom that has enshrouded us for so long, has that gloom at last been busted? We got a very rare back-to-back bull market show. Driven by great earnings, thank you, Goldman Sachs, and a retail sales number which allowed the Dow to jump 382 points in one day after a big gain yesterday. S&P tacked on 0.75%. Nasdaq advanced 0.50%. Meanwhile, the government's lifted the ban on foreign travel and approved vaccine booster shots. Both of these are great for confidence because COVID remains the biggest drag on this economy. Now, of course, this is a what have you done for me lately kind of business, right? Which means next week we have to run another gauntlet of earnings season all over again. So let's go right to the game plan. Monday, we get results from Albertsons. You've been to an Albertsons probably. It's a big grocery chain under a lot of different names. Typically, I don't like the supermarkets. Margins are too low. But Albertsons keeps expanding its margins, which is why I like it so much. I think we stick with this one. I've liked it since it came public. Tuesday morning, we hear from two best-of-breed operators. Write these two down because they're going to work, J&J and Procter & Gamble. I think Johnson & Johnson will rock the quarter and tell us that it's ring-fenced its talc lawsuits liability issue with the establishment of a new subsidiary yesterday, which then immediately filed bankruptcy, to manage those claims. But that will allow us to focus on the company's fabulous new drug pipeline, maybe the best in the entire industry. As for Procter, I bet it goes just like PepsiCo. That was a stock that's been roaring ever since it reported some incredible organic growth when many other companies didn't have it. You got my blessing to buy them both ahead of the quarter. Although, just so you know, I prefer J&J. We've got a slew of airline numbers coming this week, and with easing of travel restrictions, you know what? I think they can tell better stories, say, than Delta did this week. United reports on Tuesday, followed by American and Southwest on Thursday. They'll most likely try their best to talk about the future while avoiding the past, especially the last 90 days. Normally, I would have said that you should go by Southwest Air. I think it's okay, but I think United's become the better play, and it's got more international. After the close on Tuesday, there's Netflix. Now, this stock has been roaring thanks to Squid Game, which is a global phenomenon, and it's from South Korea. Squid dominates the virtual water cooler chatter, and that means Netflix should have a ton of new subscribers. All the more impressive when you consider that the show itself wasn't that expensive to make. Astounding company, isn't it? Also on Tuesday, Ulta Beauty's got an analyst meeting. Now, this stock's been a rocket, but after spending some time with CEO Dave Kimball at the beautiful flagship store in Manhattan, wow. The story is still too good to ignore even up here. Wednesday starts early with results from ASML Holdings. That's an extraordinary Dutch semiconductor equipment maker. We know there's a gigantic semiconductor shortage worldwide, and you need ASML's machines, which are about as big as a city bus, to manufacture more of their highest-end chips. Their technology is so important and so cutting edge that our government actually blocks the sale of their products to China. If ASML gives you any insight about how to solve the chip shortage, oh my, tech roar. Then we get a deeper read into semiconductor equipment when Lam Research, long Cramer fave, reports after the close. I think the numbers can be very strong. By the end of the day, we should have the whole picture of what increasingly feels like a dire situation, especially if the People's Republic of China keeps escalating the provocations and the rhetoric about Taiwan. Remember, the largest semiconductor manufacturer in the world is Taiwan Semi. They delivered a great quarter earlier this week, igniting a chip rally. Let's hope China stops pressuring Taiwan, both for world peace sake and to preserve the tattered semiconductor supply chain. Also on Wednesday, we hear from one that bores a lot of people. It's Abbott Labs. Doesn't bore me. Now, these guys had to pre-announce the downside. Earnings shortfall not that long ago because they made all these fantastic at-home COVID tests, but for one brief moment, we thought that we had the pandemic under control and on the ropes. Then Delta hit, and these Binax now tests, well, they've been flying off the shelves. I got like a dozen of them. Personally, I wish the Abbott Labs narrative could get back to the greatness of its medical devices, which is why we owned it for so long for our charitable trust. And remember, you want to know more about that, you can follow by joining our investing club. We put up this QR code to make it as easy as possible. And we got a fine write-up, by the way, of some salient portfolio names and cogent data for next week that's going to be delivered right to your inbox shortly. Then there are to the telcos. Verizon reports on Wednesday and AT&T reports on Thursday. Now, we want to know about new subscriber additions, and we want, therefore, a read-through on iPhone sales, because remember, they give you the iPhone sales. iPhones, and that's going to really boost Apple sales. But I don't think we want to own either stock. And while I think Verizon and AT&T stocks have both reached their lows, that doesn't mean they're ready to run. You don't buy stocks that have stopped going lower. You buy stocks because you think they'll go higher. I don't have a catalyst right now for either Verizon or AT&T. After the close Wednesday, we get results from IBM. Now, we placed this one in our Investing Club bullpen last week. So after the quarter, we're going to get a sense of whether it's time to pull the trigger for the charitable trust. You know what I think is probably going to have the most likely blowout quarter next week? Tesla, that's who. When you see brokerage firm after brokerage firm raising numbers before an earnings report, it's usually a sign that the numbers are going to be insanely good. And that's why I would bet on Tesla. I hate to use that term bet when it comes to stocks, but Tesla's a good bet. Then we've got two rails with CSX coming on Wednesday night and Union Pacific following up on Thursday morning. We'll be all over these two because I'm betting they can tell us all about the supply chain frailties we keep hearing about. I suspect we'll hear that things have actually gotten worse, not better. Just get used to it. We need more technology and, frankly, more better-paid people to be involved in this logistics chain in order to end the nightmare. After the close Thursday, we hear from Chipotle, and that's one of my absolute favorite companies. I think it's going to be a terrific quarter. I reiterate that this stock could be headed to $2,000, something I've now been saying for 1,500 points. By the way, the brisket's been a total home run. Get in the burrito. You don't have to get it in the bowl. It's not that fattening. Now, will Intel surprise us after the close? That would require a huge lift, and I don't know if CEO Pat Gelsinger can deliver that lift. I say stay long AMD and NVIDIA, the new kings of the semiconductor industry that have dethroned Intel. Then there's Snap, the parent of Snapchat. When we read surveys about online advertising, we keep seeing that Snap's gaining ground. It's just sweeter than Twitter kind of thing, you know? Stock's had a stunning move. I bet it can continue. Friday's got three that I want to own: Honeywell, American Express, and Schlumberger. Honeywell's got a mosaic of industrial businesses that are no longer relying on commercial aircraft. I think we'll hear that's what we like, which is why we've owned this position since the days of Dave Cote. He was the previous CEO, now it's Darius Adamczyk, for the Travel Trust. American Express did well during the lockdown. Imagine how much they can make now. I think they're doing well enough to give you a set of better-than-expected numbers. As for Schlumberger, who wouldn't want to own the #1 oil service company with the price of crude at $80? Hey, maybe they'll tell us crude's going to 100. Crypticians, or is it cryptocrats? Cryptocurrency advocates were going nuts today about how the SEC might grant an ETF or two for Bitcoin futures, and it might be as early as Tuesday. The speculators are bidding up crypto entities left and right, betting that the ETF will lead to a colossal spike in interest. I think that interest is coming right now, not after the ETF starts trading, and it's gotten too overheated for me. I'm actually thinking of selling some, not all, because I got a core position of my Ethereum. The bottom line, we've had an amazing couple of days. Ever since the beginning of September, you know, I've warned you that the market hits a rough patch, and it lasts through late September and through early October. But once we get through to the midpoint, then we have to get more sanguine. Well, here we are. It is time to be constructive because the cavalry's finally here to save the day. Gregory in California. Gregory.
Good day, kind sir.
Good day to yourself.
I called you just over a year ago on this same company when it was trading around $1,200 a share, and you told me it was a screaming buy. So, after doing my own research, I'm an educated club member, thank you, I bought it and rode it all the way up to almost $2,000 a share, where it was, about a month ago. So thank you for that, first of all. If I'd sold it, I would have named my new jet ski Cramer. But I'm an investor here. I'm not a trader, and especially with this one. And the street had it going all the way up to 3,000. So I was surprised to see it just collapse. Not 5% like the rest of the market, or 10% like a lot of other 10 stocks, but 25%. It went down to the mid-1400s on no news whatsoever.
No, none. But I can tell you right now, Gregory, and I was an original investor in Mercado Libre, which is the eBay of Latin America. I think you can buy some. Yes, I wish you'd trade around, sold some at 2,000, buy some 1,500, but that's too hard. But the reality is that what we care about is that it is a great company, and it's doing very well, and I think you're fine in it. I need to go to Michael in New York. Michael.
Booyah, Jim. How are you doing today?
I am doing well. How about you?
I'm doing great. Thank you for doing all you do.
Oh, you're welcome.
I have a question about the stock Fubo. I'm a 23-year-old graduate from The Ohio State University, and And it's such a saturated streaming space that's very new and seems to be growing, as I am actually a current subscriber of Fubo. And the recent partnerships with NASCAR, the Jets, and PaySafe, do you see growth potential with the earnings November 9th?
I think it's too speculative for me. Look, I did what a lot of people did. I signed up for a Green Bay Packers game a year ago and then canceled immediately after I saw the Packers game. I don't think it has staying power. I honestly don't. Now, finally, a light at the end of the tunnel. After getting through this seasonally rough patch in late September and early October, we have to get more sanguine as the end of the month beckons. Now, it's time to be constructive again. On Mad Money tonight, now that we've heard from all 6 major banks, it's time to run our quarterly check-in that we do every year for the financial sector. I'm breaking down all the action and which stocks to consider, even up here. Then the FDA's advisory committee voted unanimously to approve a COVID booster shot for Moderna. I'm finding out why you may have Amazon to thank. Don't miss my exclusive with the CEO of Amazon Web Services, AWS. And the averages ended the week on a high note, but is your portfolio prepared for what's to come? I'll be the judge of that when we play MI Diversified. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.